All right, let's dive into the incredible story of how one of India's biggest banks went from the very brink of crisis to the absolute top of its game. We're talking about ICICI Bank, and trust me, its journey is one of the most remarkable comeback stories you'll find in modern finance.
In the world of Indian banking, a major power shift is happening right now. For years, HDFC Bank was the undisputed king. But as this quote shows, there's a new frontrunner emerging. And what's wild is that not too long ago, this bank's name was tied to scandal and serious instability.
And this isn't just talk. The hard data really backs it up. For fiscal year 2025, look at these projections. ICICI isn't just squeaking by. It's beating its main rival, HDFC Bank, on the metrics that really matter. You've got profit growth at 15% versus 11%. And the net interest margin, which is a huge deal for a bank's profitability, is significantly higher. This is a decisive lead.
This success is genuinely shocking because it represents one of the most dramatic turnarounds we've seen in banking for a long, long time. So to really get how ICICI Bank pulled this off, we have to ask the big question. What exactly were they turning around from?
To get the full picture, we've got to rewind the clock to 2018. See, the bank wasn't just facing one problem. It was getting hit by two massive, simultaneous crises that really threatened its very foundation. First up, a huge corporate governance scandal erupted, and it was centered on its then-celebrated CEO, Chanda Kochhar. It all kicked off with this massive loan to the Videocon Group. But then, a few years later, a whistleblower came forward with some really serious allegations, and that set off a chain of events that ended with her termination.
The allegation was a classic quid pro quo. Basically, it's Latin for something for something. In business, it points to a serious conflict of interest, where it looks like an official decision was made not for the company's benefit, but in exchange for a personal kickback.
So here's the breakdown of how this alleged deal went down. First, the bank signs off on a loan worth over 3,000 crore. Then just a little while later, an investment of 64 crore flows from Videocon's chairman into a company connected to the CEO's husband. The connection looked pretty undeniable, and it raised all sorts of red flags about ethics and governance.
Now, while this scandal was blowing up in the headlines, the bank was fighting another equally dangerous battle inside its own walls. A mountain of bad loans. In the banking world, we call these non-performing assets, or NPAs. They're basically loans that have gone sour and aren't being paid back.
And this chart, wow, it just shows you the sheer scale of the problem. That orange line is ICICI's bad loans, and you can see it just climbing and climbing, hitting its peak right around 2018. At nearly 9%, their portfolio of bad loans was at a critical level, just eating away at profits and threatening the bank's stability.
So you're faced with a crisis of public trust on one hand and a financial mess on the other. What do? Well, ICICI's new leadership didn't just try to patch things up. They chose a radical new path. A full-scale digital transformation designed to rebuild the entire bank from the inside out. Their whole strategy was built around this idea they called future-ready technology. Now, this wasn't just about launching a new app or a fancy website. This was a deep, holistic philosophy. It was about using data to actually understand what customers need, creating simple digital experiences, and crucially, building a flexible, modern tech backbone for the entire company.
And they turned this philosophy into a clear, actionable roadmap called Technology Strategy 2025. They focused on huge areas like building massive data platforms to get way better at analyzing risk and completely re-engineering their core systems to be faster and more efficient. And they also invested heavily in their people, training them in essential modern skills like data science and AI.
So what did this look like in the real world? Well, it meant a complete overhaul. They started using artificial intelligence to predict which loans might go bad before it happened. They started partnering with nimble fintech companies to innovate way faster. And they opened up their systems with something called APIs, which let them connect seamlessly with other digital services. It totally changed how they operated.
Okay, so the big question. Did this aggressive, tech-first approach actually work? Well, a crisis forces you to rethink everything. And for ICICI, the results were nothing short of dramatic. The numbers really do tell the whole story.
So let's circle back to this chart. This right here was the crisis point in 2018. Remember that orange line? That shows bad loans at their absolute peak, that mountain of debt that was dragging the whole bank down.
Okay, now look what happened next. After 2018, right when they put their new digital strategy into action, those bad loans began a steep, consistent dive downwards.
Their tech-driven approach to managing risk flat out worked. It cleaned up their books, and by 2024, they'd hit historic lows.
And cleaning up those bad loans directly fueled this stunning return to high profitability. Return on equity is a key metric that shows how well a company makes profits for its shareholders. And as you can see, ICICI didn't just recover, it's now delivering a higher return than its biggest rival.
So, after all that, what can we really take away from this incredible story of crisis and recovery? For me, it boils down to 3 clear, powerful lessons.
First, strong governance is simply non-negotiable. Without it, even the biggest companies are vulnerable. Second, a deep crisis, as painful as it is, can be the ultimate catalyst for change you desperately need. And finally, in this day and age, technology isn't just a nice-to-have. A smart, well-executed digital strategy can be genuinely transformative.
There's no doubt about it. The bank rose from the ashes, and it did so by turning its biggest weaknesses into its greatest strengths. But in the fast-moving world of finance, where new tech and new competitors are always popping up, the biggest challenge is always staying ahead. The real question now is whether this tech-first foundation they've built is strong enough to keep them at the top.